Netflix is one of the most interesting stocks in my portfolio right now. I own Netflix because I believe the market still underestimates how strong the business can become. Today, I want to show you why I'm bullish, what metrics I care about, and why tomorrow's earnings could matter. When most people hear Netflix, they think of streaming shows and movies, but as an investor, I see something bigger. I see a company with a global scale, recurring revenue, pricing power, and more than one way to grow. That's why Netflix stays in my watch list and portfolio, because it's not a content company, it's a platform. So the first reason I buy Netflix is scale. Netflix has built massive global audience, and scale matters because it gives a company more leverage over content marketing and monetization. The bigger the platform gets, the stronger the business model becomes. That is what I like most here. This is not small company trying to prove itself. This is an established business still finding new ways to compound. The second reason is recurring revenue. Netflix get paid month after month. The subscription models creates a lot of predictability, and predictability is powerful in investing. It helps Netflix plan ahead and keep investing into growth. When company has a recurring revenue, it becomes much easier to build long-term value. That is one of the reasons I think the stock deserves attention. Now let's talk about growth. Netflix can grow in several ways. It can add subscribers, raise prices, improve engagement, expand advertising, and grow internationally. That matters because the company is not dependent on just one single growth lever. And to be honest, I like businesses with the multiple ways to win. Netflix has that. One of the biggest reasons why I'm bullish is the pricing power. Netflix has shown that it can increase prices without losing core business. That tells me that product has real value. People may complain, but many still stay subscribed because the service remains important in their entertainment routine. That kind of pricing power is major advantage. It helps revenue grow even when subscriber growth is not moving as fast. The ad-supported tier is another big reason I like the stock. This gives Netflix a way to monetize users who may not want to pay the highest plan. It also opens the door to more advertisers. It's like a huge advertisers platform, and for example, we still don't have this feature in some countries. Yeah, it's mostly in US and UK, but for example, in East Europe, the ad platform is not working yet, so they have where to grow. This is important because Netflix is no longer relying on subscription growth that makes a long-term story stronger. Now let's talk about the main metrics I watch. I focus on subscribers growth, revenue growth, operating margin, free cash flow, and ad revenue. Those numbers tell me whether the business is becoming more valuable in a real way. I do not just want growth. I want efficient growth. I want company that can expand and convert that growth into cash. Free cash flow matters a lot for me. Revenue is important, but cash flow is what shows how much money the business is actually producing after investing in content and operations. If Netflix keep improving free cash flow, that supports reinvestments, balance sheet strength, and shareholders' value. That is one of the reasons why I view Netflix as a quality compounder rather than just a momentum stock. Another reason I buy Netflix is international growth. Netflix still has huge runway outside the United States. Different markets are at different stages of adoption, which gives the company more room to grow over the time. This global reach matters because it gives Netflix more than one market to work with. If one region slows, other regions can still contribute. Now I want to mention a real risk. Subscribers growth does not move in a straight line. We have seen this before with Netflix. Growth slowed, then improved later, and then slowed again. That tells me that the issue is real, but it also tells me that something the company can work through. That is why I do not panic for the short-term deceleration. I look at how the company responds to that. Some people come to a new TV show, they watch one season and they move on. This is normal, it's streaming. Netflix's job is to keep viewers engaged with a broad library, strong recommendation, and steady flow of new content. The goal is simple: turn attention to long-term viewing habits and turn viewing habits into subscription retention. And this is why content strategy matters so much. Netflix has to keep feeding the platform with enough quality content so users do not leave after one hit series ends. The company knows this, and that is why it keeps investing in a wide content pipeline. This is not a perfect problem, but it is a manageable one, and Netflix has already shown it can adapt over time. They were streaming multiple super shows in few days in a row, but now they don't have that, and they need to solve it again, and I believe that they can do that, because they proved it already for us. Tomorrow's earnings matter because the market will watch whether these trends are still intact. Investors will care about subscribers, momentum, ad growth, revenue margin, and guidance. If those numbers show that the business is still moving in the right direction, the stock could react well. And I don't need perfection, I just need proof that the long-term thesis is still alive. And the short-term problem is not an issue for me. If the Netflix stock price will fall again, I will probably buy more. Of course, there are risks. Valuation can be high, content spending remains heavy, and expectations are already strong, so even a good report can still create volatility if the market wanted something even better. But that is part of investing into a premium company. I'm willing to accept that because I believe that the long-term setup is still attractive. So in the end, this is why I own Netflix in my portfolio. I like the scale of recurring revenue, the pricing power, the ad opportunity, the international runway, and the improving cash flow story. I also respect risk, especially subscription growth. Even if it will be slowing down short term, I am fine with that, but I really hope that they will become better. Also, retention growth should be there. With time, I want to see the retention growth. Short term, I don't care about that, but long term, that matters. Overall, I still believe that Netflix is one of the strongest players in media, and that is one of the reasons why I'm so bullish. I really believe in this company. They disappoint us in short term, but overall, they are better than other competitors.